Okay, so morning everyone. Welcome to the second semester. I know the first semester just finished a few weeks ago, and we're already on the second semester, and we haven't even finished the exams for the first one. But what is great about the second semester's work is even though we haven't finished the first semester, the type of learning units we're going to look at in the semester is sort of discussed on their own. So even if you don't understand a specific learning unit, it's okay. You can actually still pass the subject. It's a lot easier for students to pass the second semester than the first one because of the fact that there's specific rules you have to follow. If you understand the rule, then you can actually apply it and just pass the questions. Okay, so for those of you that don't know me, I can see based on the guys that are logged on, a lot of you I've seen from first semester. There's one or two that I don't remember from first semester. So I'm Astrid Halberg, and like you can see, I'm married. I've got a little daughter. She's almost 1 year old now. And just a little bit of background, I studied BCom Accounting Sciences and then did my honors and went on to study till I finished my CA's degree. So that is just a bit of background about me. I've put my email address on the side. So if you've got any questions during the semester or you struggling with some of the activities on VC Learn or whatever the homework, the LACs, the ICE task, you are welcome to contact me on that email address. I do have it on my phone, so I normally do respond as soon as possible, unless I've got another meeting, then I generally take a bit longer. So my normal availability, so when you will see me online or in class is generally Mondays, Tuesdays, and Thursdays. And then I am still available the rest of the week in normal work hours from 8 to 5. So if you've got questions, feel free to pop me an email and I'll respond as soon as I can. If I am on leave, I will put it out of office on my email, and I generally do tell you guys beforehand just so that you are aware, just that you don't feel that you are being left alone to deal with accounting on your own. Okay, so just some basic information. VC Learn has actually gone live over the weekend. So because of the fact that we already set up the Zoom meetings for today, we left it as such. But the next one, collab session, I will send out a link to VC Learn. So you should be able to access your VC Learn to do some of the activities you'll have for homework. So on your timetable, you'll see they refer to your collab sessions, face-to-face sessions. So they said the first 2 weeks will be collab, and then after that, they will then reproportion it to the 50, 25, 25% for the remaining sessions. And then on your VC Learn, I will post your LAC sessions. So you've got first 13 LAC sessions that you have to do during the semester. You have to do it in your own time, decide when you have time to do it. I will load activities that I want you to complete for a LAC. Some of them will be ICE task, others will be specific questions that I want you to work through, or specific VC Learn activities I want you to go have a look at. Then your textbook is the Moritz and the Hiblings, the 2021 edition, your Accounting 1B textbook. If you've got a 2020 edition, that is also okay. There wasn't too many changes from the two editions. So if you've got an older edition, don't worry about it. And then your workbook with the tables where you have to do the activities to assist you. Then the materials, so the slides I'll load onto VC Learn for you. And then under the more resources on VC Learn, you'll find your ICE task and LAC activities that I'll load as we continue. Okay, and then I'll set up, just like the first semester, I'll set up a YouTube channel so that if you miss any of the collab sessions, I will load those videos up there for you. Okay, so this is just similar to first semester, how we are going to split the semester modules. So 50% will be face-to-face. You'll see me physically in class. 25 will be online, and then another 25% is where you have to do sort of self-study and do the activities at home. Okay. Now, my expectation hasn't really changed from the first semester, but let's just go through it for the guys that are new to my class. Okay, so class attendance is very important, guys. With accounting, it's not one of the subjects where you're going to read the theory and just master the subject. Unfortunately, there's a lot of intricacies and funny things that sometimes students struggle with. So it's easier if you attend class so that you can clarify whatever you don't understand, so that you can actually work it out. Then mutual respect. Each of us have a viewpoint. Each of us are different. So I want us all to respect one another and respect someone else's viewpoint. It might not be the same as you, but that's okay. That each of us are different. Each of us learn in a different way and understand stuff in a different manner. And that is perfect. And we need to respect one another in order to make this a good class environment for everyone. Then I want you to be prepared for class. So if there's specific activities I give you for homework, I want you to do it for class. We've got limited time. There's a lot of sessions or work that we have to cover. A lot of it takes a lot of time. So if there's specific things I give for homework or pre-reading, I would be grateful if you guys can be prepared for class, because it will help you to understand the information so much quicker. So those two, the be prepared and homework, sort of linked together. I've already covered the LAC and ICE activities that I'll load for you. Please ask me questions if there's something that you're wondering about. The chance that someone else sitting next to you also has the same question is generally very high. Students tend to have similar type of things that they struggle with. So ask if you're unsure. There's no stupid questions in my class. I just want you to understand it and master the subject as best as you can. If you do not feel comfortable asking the question in front of the class, that's also fine. Please send me an email and then we can address it offline if that is better for you. And then I want you guys to have fun. So let's have fun in the second semester. So the second semester is a lot more practical. It's doing financial statements. It's doing a bank reconciliation, a creditors and a debtors reconciliation. So we're physically doing what a lot of accountants do in practice on a month-to-month basis. So now you're actually going to see what does an accountant actually do. So the first semester we looked at the theory and the background behind it. How do you actually get the information? And now we are busy doing month-end procedures. So what does an accountant actually do at month-end to make sure that all the information they've captured is accurate? And then some of it links in with your year-end procedures, which the auditors would also generally take that information when they audit your set of financials to ensure that your information is correct. Now, the learning outcomes for this learning unit, which is your bank reconciliation, you need to be able to explain the purpose of the bank reconciliation, as well as prepare a bank reconciliation. So explain the purpose is why are we doing a bank recon in the first place, and then be able to prepare it. So there's not a lot of learning units in this learning unit, but it is a lot of work. So just because it's 2 learning objectives or outcomes doesn't mean it doesn't involve quite a few steps. Okay, so let's talk about the business and the bank. How does it actually work in practice? Now, a bank is a business just like any other type of business. Okay, now what a bank generally does is you can invest your money in the bank and they will hold it. And then what they generally do is that money that they've collected from investors, which they then pay interest or dividends, depending on how you invested your money, they will then borrow it out to another party and they will then charge them interest for that loan. So that's normally how a bank works. So they offer you a bank facility. It can either be to a business or an individual. So either a business can go to a bank, or me as an individual can go to a bank. So all of you should have, okay, most of you should have a bank account. Depending on whether you work or not will determine how much you use that bank account. Okay, so all of you should in essence be a customer of the bank. Now your bank account is, if it's used by a business, is called a current account. Now why do we call it a current account? That is an account that we use to do all our day-to-day transactions. Now with a current account you get a whole more flexibility in managing your cash flow. So you can decide how much money you want to put into their current account to spend it and when you want to repay it. So you have a lot more flexibility with a current account than you would have, for example, with a fixed deposit account. So a fixed deposit account, you would put the money in and it would stay there for a fixed term before you can do anything with it. Whereas with a current account, it will fluctuate from day to day depending on whether you get money in or paying money out. Now, a lot of managers use that for their business to manage their cash flow, to make sure that the business is liquid and we are able to pay our accounts. Now, as soon as we do not have enough money in that bank account, if you have the bank facility, you can go into an overdraft facility. Now, an overdraft facility is basically where I'm borrowing money from the bank, but on a short term. Now, overdraft facility, you can generally look at an interest rate of 20% plus, depending on what your credit rating is. The bank will assess what interest rate they will charge you. Now, if I go into an overdraft, it basically means I'm no longer liquid. My short-term liabilities, so our current liabilities that we did in first semester, is more than my current assets. Okay, and most businesses try not to get into that space because as soon as you start getting into that space, you can run into trouble and eventually it will mean that you have to close your business. Okay, so that's basically what the bank is in a nutshell. Now, the daily banking process, how it works, as you'll see on the screen, I've got in the top right corner, you've got an example of a bank statement. Now you'll see on the bank statement, it's got the date, it's got a description, a reference number, then withdrawals, deposits, balance. Now withdrawals is basically your payments. Your deposits is any money that come in. Now that's one format that a bank statement can be. But then an alternative one is instead of where it's withdrawals, it can tell you it's a debit and then a deposit would be a credit. Now, who can tell me why will a deposit on a bank statement be a credit if from a bank's point of view? You can either put on your mic or you can just type in the chat function, what do you think? Okay, so let me just repeat the question. If we look at a bank statement, if a deposit, why would a deposit on my bank statement be shown as a credit? You guys can just give me an answer in the chat function. If you're not sure, then type in the chat function, you're not sure, or take a stab at it. Okay, do you guys just want to put a reaction in the chat function that I can just see you still alive and you haven't frozen to your chair there in your room? So I see Michaela is alive. How about the rest of you? Palesa, Neil, Angela? Our user, are you guys still there? Okay, so I see you guys are not sure. So, okay, let's quickly discuss the daily banking process and then I'm going to answer that question for you. Okay, so we've got a bank statement and at the bottom you'll see we've got, for example, cash book payments. Now, in the first semester, we looked at both the cash book payments, cash book receipts. Now, I've just put the cash book payments in here, but you would do both. Now, what would generally happen is the amounts that are on the withdrawals column would actually go to your cash book payments column here. Okay, so let's just, okay. So what you have to do, firstly, your daily banking process is I'm going to take my bank statement and then capture whatever the withdrawals and the deposits are in my cash books. Now, in this case, it would be the cash book payments. Now, it's not exactly the same amounts because it's two different pictures. When we do a physical example in class, we'll have the same information. So what would happen is the withdrawal information would be transferred into my cash book payments, your deposits into your cash book receipts. Now remember, a deposit, when we receive money in our cash book receipts ledger, what do we do with the bank? Do we debit or credit the bank if I receive money? So in our cash book, once I've completed my cash book receipts, do I debit or credit the bank account when I transfer it to my general ledger? Now you have to think back to first semester when we were busy with this. Okay, let me phrase it in a different way. My cash book receipts. That shows all the money I've received. Now, if I receive money, did I increase or decrease my bank balance? You can just type in the chat function. So if I receive money, okay, so I've got one answer that says if we receive money and we put it in our cash book receipt, we are increasing our bank balance. Okay, now on which side of the general ledger account do I debit or credit my bank account if I increase it? Okay, so let me just repeat that. If I increase my bank account in my general ledger, do you debit or credit it? So which side does your asset account increase again? I've got one answer which says they think it's a credit. What does the rest of you guys think? Okay, so Michaela thinks it's a credit. Okay, so remember, if we've got an asset in our books and an asset increases, we will debit the account, okay? So an asset, when it increases, is always being debited. Now, why the bank credits the deposits is because of the fact that they actually owe us that money. So they've received the money on our behalf, but now they have to pay it over to us. So they owe us that money. Now we said when someone owes us money, they are a creditor. and a creditor is a liability, okay, or falls under the liability bracket. So we increase a liability on the credit side, and that's why a deposit is a credit on your bank statement, because of the fact that the bank actually physically owes you the money. But then when we capture it in our books, we show it as a debit because it increases our assets. So that is where your double entry comes in. So it's a debit in our book, and we would credit whoever account was paid, whereas in the bank, it's shown exactly as the opposite. So just remember, when we're capturing a bank statement in our bank reconciliation or on our cash books, we're going to have opposite symbols on our side because of the fact that it's an asset on our side and not a liability as shown on the statement. Okay, now what we do is we compare the movements in the cash, in the business cash book, so our cash book receipts and cash book payments. So whatever we've captured here, we compare it to our bank statements. Now that we do at month end, in order to try and get back to this balance. So this balance here in our bank statement should in fact agree to the balance in our cash book. Okay, so if you take the cash book receipts less the cash book payments, you should get to exactly the same balance when you do your general ledger account. So that's what we're working towards. Okay, now the bank reconciliation process. Now how that works is now we've compared the bank statement to our cash books. Now a bank reconciliation is basically a document that compares your bank balance in your general ledgers, your accounting records, to the amount in the bank statement. Now can someone tell me, why do you think there might be a difference between what's in our general ledger and what's in our bank statement? What do you think might be the reason? Okay, so let me repeat the question. Do you think there is anything that would result in there being a difference between what's in my general ledger account, so in our accounting records, versus what's on my bank statement? Okay, do you think there's any reason? So what do you think, guys think? Is there something that might result in there being a difference? Just give me a yes or no. Okay, so one person thinks no, there isn't anything that would be different between the two. What does the rest of you guys think? Michaela also thinks no. Angela, Neil, Palesa, what do you guys think? Okay, Neil says he thinks no. Palesa, Angela, what do you think? And whoever user is, you can also give your buy-in. You have a 50-50 chance of getting the answer right. Okay, Angela also thinks no. Okay, so in the ideal world, there shouldn't actually be any differences. Now, unfortunately, because of how systems work and um, processes within a business versus a bank, there is something that we call timing differences. So it means I make a payment today, for example, EFT payment on my banking system, but it only reflects on my bank statement in 2 days' time because of the fact that we've missed the cutoff that the bank processes these payments, for example. So what will happen now is I've actually recorded that payment already in my accounting records because I've made that payment now. However, the bank only reflects it on their bank statement a few days later. Now, during the month, that is not an issue. Where the problem comes in is exactly on month end. So let's say I made a payment on the 30th of July, but now it only reflects on the 1st or the 2nd of August. So let's say I made it on the Friday. So normally what would happen if you make a payment after 4 on a Friday, then they would only process it on the Monday morning. Or the bank statement would only reflect it on the Monday morning because they don't actually process the payments over the weekend. So now what would happen is my bank balance in my general ledger or accounting records would actually differ to what the bank balance is on the bank statement. For that reason, because of the fact that I've reflected a payment in my books, but the bank only reflects it at a later stage. So that is why we do a bank reconciliation, is to reconcile why is there a difference between the balance in my accounting records versus the balance in my bank statements. And that is the purpose of our bank reconciliation. Now you have three types of reconciling items we get. So the first one is errors. That is where either the bank or the business made a typo. Okay, so or they've included something, the bank, for example, included something that's not ours on our bank statement. So that's the one type of error. Now, error can happen on either the bank statement or in our accounting records. So depending on the information, you would either go corrected in your cash book payments or cash book receipts, or you would show it on your bank reconciliation. Then the adjusting differences is, for example, where things were captured on the bank statement, but I wasn't actually aware of it to capture it on my accounting statements. Now, examples of that is, for example, where a debtor deposits the money directly into your bank account, but they haven't notified you that they've made a payment, so you haven't captured it in your cash book receipts. So what happens is before I close off my cash book receipts for that month, I actually go capture it on my cash book receipts. Then a timing difference is the bank and I have actually recorded it, but it just happens on different dates because of the fact that how the process works. So that can either be an EFT or a check or a deposit where there's a time lag between when it is processed by the business versus the bank. Okay, and that is timing differences. Now, those timing differences are normally reflected on our bank recons. Now, to complete our monthly procedures, we then reconcile our bank balance back to what's in our accounting records. And the reason we do this is to make sure that there's no fraud or cash manipulations happening within a business. Okay, so a bank reconciliation is the easiest way for management to actually pick up if money is being stolen or if someone is starting to invoice things incorrectly or take some of the money that has been deposited. So that's why we do a bank reconciliation, mainly to pick up any fraud or cash manipulations within a business. So when someone's trying to hide it, and this is because a bank reconciliation is generally done by multiple parties, it becomes a lot more difficult for that person to actually steal money out of a business. Okay, so that is a bank reconciliation. Now, what does a bank statement look like? So I've put an ABSA bank statement on the screen for you to show you what an ABSA bank account looks like, or bank statement. Now, you'll see the transaction amounts for the ABSA account, on the other hand, has 30,000 with a negative, and then there's a 15 Rand 50 cents with a negative, then there's a positive 1,600. So in this case, they don't show you the withdrawals and deposits columns separately. They actually show it as one column, but the negative shows you it is the withdrawal, so it's physically going out of your bank, whereas the positives is your deposits. Okay, so bank statements can look slightly different from one bank to the other, so that's just something to note for practice when you go into business, that your bank statements might look slightly different, but the concept is still the same. Okay, now what a bank statement actually shows you, it shows your deposits as a credit, so a negative amount, and your bank payments as a deposit, a positive amount. Now in this case, they've actually done it the opposite way around. Okay. So they've actually shown, because of the fact that the money is going out of the bank, they've shown your debit as a negative amount on the statement and your credits as a positive. Okay, but in your textbook, that's how they show it normally. Okay, now we've discussed why a debit is deposits and a credit is your a debit is your withdrawals versus a credit is your deposit, and why it's different to how we account for it in our textbooks. Okay, so just to recap, why did I say is a deposit shown as a credit on our bank statement when we receive money? So we've discussed this earlier. Why is a deposit shown as a credit on our bank statement if we are receiving money? You can either type your answer in the chat function, or you can put on your mic and just explain to me. So let me just rephrase the question. Earlier, we've discussed why a deposit is shown as a credit on our bank statement. So tell me, why is it a credit on our bank statement if we're actually receiving money? Did you guys understand the question? Okay, so user said it's from the bank's point of view. Okay, yes, that is correct. Okay, but explain to me, if you say it's from the bank's point of view, what do you mean by that? So why does the bank show it as a credit if it's from their point of view? Okay, that's correct. It's a liability from the bank side, and a liability increases on the credit side. Okay, so the user, so what I said is I just asked you why, explain why from the bank's point of view. So it's correct, it's from the bank's point of view. So I wanted to know, why do you say that? So then your colleague actually answered it for you and said, because of the fact that you have a liability. So the bank owes us money. and liabilities are increased on the credit side. That is why deposits are shown as a credit on your bank statement rather than a debit. Okay. Now let's discuss the steps for doing a bank reconciliation. Now, there's two methods of doing this. I'm going to explain the one method in this session, and then we'll do the other method then in next week's class. Okay. What you need to remember, however, is stick to one method. Do not confuse the two methods because they're slightly different, but they do get to the same answer. Okay, now in this bank reconciliation procedure, you've got 5 steps. Now your first step is you compare all the credits on your bank statement. So that's all your deposits that the bank received, bank column to your cash book receipts. So what I'm doing now is I am going through each and every deposit that the bank has recorded, and I'm comparing it to the receipts I recorded into my cash book receipts journal. Okay, so that's what the CBR stands for. Now, if there's anything that is not on there, where do you think I take that information? Okay, so let's say I've got a deposit on my bank statement, but I do not see it on my cash book receipts. What do you think I'll have to do? Okay, I'm just going to repeat the question. If I've got a deposit on my bank statement, but it's not reflecting on my cash book receipts, what do you think I'll have to do? Okay, so one of the answers is compile the bank reconciliation. Okay, potentially, yes. Is there any other answers? What do you guys think? Any other takers? What do you guys think? If I've got a deposit on my bank statement, but it's not reflecting on my cash book receipts, what do you think I'll have to do? Okay, I see the rest of you aren't sure of the answers, so let's have a discussion about it. Okay, so you won't necessarily, you will compile the bank reconciliation. Yes, that's what we are busy doing. But compiling a bank reconciliation, as you can see, has multiple steps. But what it means is when I compile a bank reconciliation, I don't necessarily include everything on the bank recon itself. Some of the items I might actually go and record in my cash book receipts or cash book payments in order to eliminate some of the differences. Now, if something is on the bank statement, but I've never recorded it on my cash book receipts, then I will include it on my cash book receipts and it will not show on the bank reconciliation because I've actually corrected the difference because it's something that I wasn't aware of that needed to be reflected on my cash book receipts. However, if I've got something on my cash book receipt, so let's say I've recorded a deposit that I've received from money I've received from a debtor, and I went and banked it, and it doesn't reflect on my bank statement. So now I go from the opposite direction. So I've already recorded it, but the bank hasn't recorded that. Then that outstanding deposit that's not reflecting on the bank statement will appear on the bank reconciliation. Okay, so that's how you need to think about it. Then step 2 is we do the same that we did in step 1, but now we're looking at all the debits. So all the payments and withdrawals that went through the bank statement, we compare it now to our cash book payments journal to make sure whether there are any differences. So if it is reflected on the bank statement, but not on my cash book payments, I will then record it in my cash book payments. But if it's on my cash book payments, but haven't gone through the bank, then it goes to my bank reconciliation. Now, step 3, they talk about amendments, additions to cash book recorded. Now, that is step 1 and step 2, where it's on the bank statement, but it hasn't been recorded in the cash book. This is what that step refers to. Step 4 then talks about now we compile the bank reconciliation. So now we are reconciling the balance in our cash book, receipts and payments, so the net balance, which is our bank balance in our accounting records, to the bank statement. And the reconciling items are normally those items that have been recorded in our cash book receipts or cash book payments, but is not showing on the bank statement yet, or any errors that have occurred will be recorded there. And then those reconciling items, we normally then go and investigate that to make sure whether those are valid reconciling items. Is it something that the bank needs to rectify? Is it something we made a mistake on? And then we correct it for the following month. Okay, so that is your bank reconciliation process. Now let's quickly look at examples, just how to do the bank recon before we break, and then we'll continue in the second session. So on the left-hand side, this is what your textbook look like. So they will give you a debit and a credit column. So your debit is your payments, your credits are your deposits. Then you've got your cash book receipts, your cash book payments. Now, as we do step 1, we compare your bank statement, so BS's bank statement, credit with your cash book receipt. So I'm comparing this column to my bank column here. Now, if they are the same, I do a little tick on the 2 documents so that I know it has already been matched. If I see anything on here that's outstanding, I put it on the bank reconciliation. Okay. Step 2, now I'm doing exactly the same with the withdrawals than I would have done with the receipts. So you do little ticks if they match up. And then any outstanding items you would take to your bank recon. Now the amendments, you'll see there's a black line here on your cash book receipts. There will also be one on your payments. This is where you add any additional items that appeared here on your bank statement but wasn't recorded on your cash book receipts or cash book payments. And then if an item appears on your cash book receipts or your cash book payments but doesn't appear on your bank statement, I take it to the bank reconciliation statement. And now once you've updated your cash books, then you draw up your bank general ledger account to get to what is the balance at the end of the month that I need to compare to my bank statement. And then you do your bank reconciliation. So then I do the balance per the bank statement. So what has the bank told me the balance is? I compare it to the balance I have in my general ledger account, and then I record all the reconciling items. Now in this case, you'll see there were outstanding checks, outstanding deposits, and then these 3 items here are the corrections that you would have recorded. Okay, so that first amount needs to be the same as your bank statement. Any checks is what has not physically gone through the bank. You can also transfer some outstanding checks from your previous bank recon if it hasn't actually cleared through the bank yet. Your deposit is money I've received and banked, but it doesn't show on my bank statement yet. And then this balance must always agree to your general ledger balance. So step 3's amount. Okay, so we're going to break and then we will continue in the second session with the class activity. Please remember that Jackie sent out a second link for the second session. So if you can just log in there, then we will continue at 9 o'clock. Okay, thanks guys. Enjoy your 10-minute break.